Thank you so much for that. Well, that's of course the big story, right? Freight costs have surreptitiously increased multifold since the time Red Sea crisis has hit the global markets. Let's just map it for you now, because that has been the case for a long time. Since the time Houthi rebels, they launched armed drones in the region, and since then it's been a one-way move. Freight rates, they were at $1,384 per container end of November, which moved to levels of $1,461 in December first week, and by the end of December it moved to $1,661. A big spike in January because we saw big moves. $2,670 moved to $3,072, then we reached peak of $3,777, and in Feb it stabilized at levels of $3,700. That continued in March as well. In fact, we saw some decline in freight rates where it was around $2,900. This continued for a bit, but entire April was around $2,700. In May, it saw a spike again to levels of $3,159, and since then it has kept going higher. By end of June, freight rates reached $5,318. In July first week, it moved to levels of $5,900 a container, and it stabilized in August. In last 1 week, we have seen it come off to levels of around $5,550. But just in Q1, how have these rates moved? The Composite Index suggests increase of 87%. In fact, individual routes now from Shanghai to Los Angeles, there the rates are up 80%. From Shanghai to Rotterdam, they are up 137%. From Shanghai to New York, these rates are up 60%. Have Indian exporters seen an impact of the freight rate hikes? Yes, they have. Let's talk about some examples. Reliance Industries said the cracks in refining segment were impacted due to higher freight rates and ultimately lower exports. Divi's Labs, on being asked about the impact of freight rates, said that they are not immune to issues of container availability and freight cost issues. They did face challenges, and exports continue to be under pressure. Welspun Living, a big exporter, indicated that there is stock build-up due to Red Sea issues, and they continue to monitor the same. Aarti Industries indicated that volume growth in some segments in exports could be impacted due to Red Sea crisis. UPL said contribution margins declined due to price decline, liquidation of inventory, and increase in freight costs due to Red Sea issues. Galaxy Surfactants called this a tricky situation, since freight costs have doubled in most of the sectors, and getting containers to load products for exports is an issue. APL Apollo indicated that EBITDA per ton was impacted due to high employee costs, power costs, and also freight costs. While Container Corp indicated that EXIM volumes in Q1 were hit by high ocean freight rates and shortage of containers. Balkrishna Industries indicated that freight costs expected to increase to 9% of revenues in Q2, largely because of Red Sea crisis. It was at 6.4% in Q1. Blue Star indicated that they have taken a price hike due to higher freight costs and that exports could be muted in FY25. Growth would be just between 6 to 7%. Supreme Petrochem indicated delay in export orders due to freight costs going higher. On the back of the surge in freight costs, shipping major Maersk increased full-year guidance in calendar year 2024. EBITDA guidance increased to $7 to $9 billion from $4 to $6 billion. EBIT guidance increased to $1 to $3 billion from negative to $0 billion. In fact, free cash flow guidance has also been raised to $1 billion versus negative cash flows that they expected earlier. Now, what are the current regional rates? As on 18 July, Shanghai to Los Angeles, which was at 7,512, has come down to around 6,500 in August. For Shanghai to Rotterdam, it has come down to levels of $7,900, and Shanghai to New York, from $9,400, it has come down to around $8,900. Just last week, Maersk indicated that growth in second half could slow down for container volumes from 7% in first half to around 4 to 6% in the second half that they are talking about. They also indicated maybe shipping disruptions could last until the end of this year. If that does happen, exporters could continue to see an impact.